Hi, everybody. My name is Phil Blancato. I'm CEO and President of Ladenburg Asset Management, Chief Market Strategist for Rosaic. Welcome to another weekly Market Impact. Just 2 to go for the year. Wow, time flies. Hope you had a wonderful weekend. It's amazing that we are rapidly closing in on the end of the year. Christmas, for those who celebrate Christmas, in just a few days here. Very exciting time. So much to go over, so much to talk about, because it's all fun stuff right now. Forget the economic stuff. That's boring. All kidding aside, we're going to do a little bit of everything today, like we did last week. Keep it fun and interesting, but hopefully give you something to remember about as we wrap up the year. Well, I have to start off with yesterday. Yesterday, I mean, there was some good NFL football games. I mean, NFL seems boring to me anymore, with college being, as Jamie Desmond says, my business partner, the football's now played on Saturday, not Sunday. I have to agree with it. My Georgia Bulldogs have a big game coming up in a couple of days here. Disappointing, the Ole Miss game in Tulane wasn't great, and certainly the night game with JMU, a friend that goes to JMU, they didn't do very well. They hung in there in the second half. I give them credit; they didn't give up, but not very good. I guess the playoff format's going to have to change next year and see what happens with some of these things. Oregon looked like a pretty good team. The day game was good. That wasn't a bad game. I guess that was a little bit more fun. Anyway, more or less about football this week, because we always talk about football. I'll talk about football next week. I'll talk about Sunday, because Sunday was the winter solstice. And for those who know me well, I always found that day fascinating since I was a little kid. Something about the way the days get longer after the solstice and the dark days going into it. I know this is Stonehenge phenomenon, and that supposedly the way those stones are positioned, it's around the winter and summer solstices. But to me, it's just a measure of optimism. And for those who might follow me on Twitter or LinkedIn or Facebook for that matter, I put out a little picture of why I think it's important. Now, at the shortest times of the year, it's also followed by some of the most fun times of the year, whatever you're celebrating this time of year, whether it's Hanukkah or Christmas or Kwanzaa or just nothing, and celebrating the new year. There's a lot to celebrate at a time like this, and hopefully you find some time to do just that. But to me, that measure of optimism. So maybe you had a rough year in 2025. Maybe you're still struggling with, you're not feeling well, or things didn't go for you great with relationships or work or whatever. To me, it's a turnaround day. It's a day to rethink. How do I use what hurt me last year to better me for next year? That's how I've always looked at it. It's fun to be an optimist. For folks who are not optimists and get too worked up on everything, I feel bad for you, because that's no fun. I just never been a person to carry a lot of hate and anger around. It's just not a way to live life. So my personal point of view is this is a spectacular day, because today will be a few seconds longer in the daylight than it was yesterday. And to me, that's just a powerful thing. And I don't hate the longest day of the year in June, because that's the hot summer days of New Jersey to come. So that makes it for a lot of fun too. So I just think those are pretty cool times of the year. Right when the sun is the furthest away from us, suddenly it turns and starts coming back the other way. Very fun, very cool. Anyway, hope you had a wonderful weekend. The next big thing on my agenda is my favorite holiday of the year. I think Halloween is a cool holiday. Thanksgiving is the no guilt holiday, but just gets to have fun. But from a religious Catholic's point of view, I read a sad piece over the weekend that on the Northeast, but especially in New Jersey, they're probably closing 50% of the Catholic churches over the next 5 years, because they just don't have anybody going anymore. If you look at the number of priests in New Jersey in the 70s versus today, there's less than half. So religion is changing, and I get that. How we view the world, and why people are maybe less religious for lots of hosts, lots of reasons. I understand why that happens. But for me, I'm still a Roman Catholic kid from New Jersey, mom and dad from Italy, and I still go to church once in a while. Don't be mad at me for me if you don't. It's just my own personal point of view. Why I mention that is because Christmas is a big deal for us. Christmas Eve and Christmas Day are very big celebratory holidays. But Christmas Eve is my favorite of all the holidays throughout the year, and they're all great in their own way. But Christmas Eve, because of what we eat. And without my mom and dad around, as those who've listened to my podcast for a while know that I certainly take a lot of pride in my Italian heritage and my Catholic heritage. But one of the days that reminds me most of that is the Christmas Eve. And that for many years, when I was a kid, it would be 30 to 40 of us at my grandmother's house with more fish and more things I could even begin to tell you about. It was quite incredible. And then as the families grew, each individual family, when my mom and dad were alive, we had big groups in my house, 15, 20 people easily, between significant others and friends and family and cousins. It was always quite big. And then, as mom and dad now have passed and moved on, my brother will host Christmas Eve this year, and it'll probably be a smaller group for now, but eventually all the kids hopefully will get married and have children, and we'll be right back to the 30 or 40 we once were. At least I hope so. So it's about family. It's about celebrating those who are not with us anymore, and it's about celebrating a very special night as we enter a special season of for me personally about the holidays in themselves. The plate's fun. So the fish, it's all about the seven fish, and the seven fish was never that. Here's a funny thing about my family. It was always about fish, but never necessarily seven fish. I don't know where that actually comes from. We've kind of adopted it because everyone does it, but it's the feast of the fishes for us, not necessarily the seven. So we'll have 10, 11, 12, something like that. And it is shrimp made three or four different ways. And then I'll make bacala, which is famously cod, with salted cod that if you went into my basement right now, you see this big bowl that I have, and I've got the water on a trickle running all day long, taking the salt out, but it leaves a little bit of a salty flavor to it when you go to cook it. So it makes the cod, which is kind of a flavorless fish. It's good, but it doesn't have a lot of flavor. That salt that's embedded in it makes it good. So I'll fry it. I'll make it in a red sauce and a white sauce. The most important feast of the night is the simplest dish. My mom and dad were peasants. They didn't have any money. So the simplest of dish were pasta with anchovies. You can make a plate of pasta with anchovies for probably $1.50 still to this day. So I get a kick out of that. It's very easy to make. You take a can of anchovies, you can get them spicy or hot or whatever. Put it in a good skillet with a little olive oil and garlic. Heat it up till the anchovies almost melt. Take the pasta when it's half cooked. Throw it into the pan, stir it around, add a little pasta water, let it cook for a minute or two, and that's it. And it's amazing. It's salty and tastes like fish. But we'll have other things too, like king crab leg. That's a new addition. And we'll have oysters and we'll have some lobsters. And we did improve it. As we made a bit more money, we've gone upscale a little bit, which makes it fun. So the feast of the fish, or the seven fish, I guess I should say, is coming up here in just a few days, and I'm very excited about it. So I hope you enjoyed the winter solstice. It's a special moment for me, but followed up by many wonderful moments. And it's time with family and friends, and celebrating the year that was, and soon the anticipation of the year that's to come. So for me, it's one of these moments that you really do recharge. You really do think about how you can do it. And if you have a young family out there with little kids, the magic of Christmas is still incredible. But even if you don't, and you still exchange presents, I think it's still fun. And if you're not doing Christmas, but you did Hanukkah, hopefully it was a safe one for you and no issues. But a wonderful Hanukkah season. Then for those who are celebrating Kwanzaa, I don't know much about Kwanzaa. From what I know, it's becoming more and more popular. So that's cool. That's fun. And whatever you might celebrate, I hope it's a special time of the year for you. All righty. So today, in just a few minutes, I'm going to bring on some friends, not just yet, but they're going to continue in my series of having some colleagues of mine join us to talk about topics that were relevant to them in 2025. I do want to hit on a few kind of economic things that I think are fun and interesting. First, a quick update on the markets. Good week last week, not a phenomenal week. The market was basically flat, up 0.13. Small caps had a tough week, only up 0.3, 0.83. We had a tough, turbulent week in the beginning of the week. It was a little better towards the end. Growth stocks for the winner. The only one that was positive, they were up 0.55. International stocks up 0.2, almost flat again. Surprisingly, emerging markets sold off a bit. That's because of currency valuation. Bond market had a good week, up 0.34 on the bond market. So exciting that the bond market did quite well. Nice to see that the bond market's hanging in there. And really a great year-to-date return on the bond market, up a whopping 7%. So really very impressive in what's happening in the bond market. For those of you who don't own bonds, I think this is a great example of why you have to own them. And I think bonds were considered, call it insurance in the portfolio for a long period of time. Well, this year proves that it's not, and really is it really is exciting that the bond market did so well. All right. Anyway, so continuing on with markets, I think we hang on a second, everybody. Sorry. I think we did have a really interesting period of time with knowing that you could do well in a lot of different markets this year. As we look back at 25, the winner is clearly going to be 30% on international stocks as of now. And we have a little international recently, not a lot. It was really about the trade between the dollar weakening and the euro staying strong. But that's a pretty impressive trade. The real winner in the year, my gosh, gold. And now silver, just a conversation with the guys this morning, both up incredible amounts. Gold at 4,300 an ounce, silver at 65. Silver's up something like 140%, gold up almost 65%. Incredible numbers. And it's because there's a problem with debt in the world. It's not just because of wedding season and buying season. It's probably because every major country in the world can't get their fiscal house in order. The latest is Japan. Japan, with high runaway deficits, is having a very tough time getting their fiscal house in order. And until the world starts to get to a balanced budget somewhere, other than Germany, which is now spending money, you're going to have a problem where gold probably looks like a fairly interesting asset class. So that leads me to a fun topic that I got this morning that I can't help but talk about: inflation. So when you look at the 12 Days of Christmas, that great Christmas song, and I actually have heard, I've only heard it once so far. I heard the funny version when someone's drinking too much. It's quite funny. If you haven't heard the 12 drinking days of Christmas, you should listen in. It's quite hilarious. But they did an analysis. JP Morgan did an analysis. It's quite good of the cost of things that are up this year versus last year. And when you look at the total cost of the 12 days of Christmas, it's up 4.5% for the year, which is better than the prior year of being up 5.4%. 4.5 is, it's fair. I mean, inflation up about 3%, but there's some things that are up a lot. So for example, you look at 5 gold rings, they're up 32% since last year. A partridge in a pear tree. Pear trees are limited in supply this year. Pears are up 13%. 10 lords of leaping, the service industry up 8%. 9 ladies dancing up 3.5%. That's not too bad. Now here's where you get a break. If you're going to buy food, food has gotten pretty much flat. Geese up 3.3%. 12 drummers drumming, you're not eating drummers, but service industry up 2.2%. 11 pipers piping only up 2.2%. Here's the fun part. Swans, calling birds, French hens, and turtle doves all flat. So, okay, some things are more expensive, mostly gold. Gold was the big one. And that makes sense because, as I mentioned earlier, gold is up a whole bunch. So I think that's quite interesting that you see those kind of numbers because last week we got some data and some of the data came out on CPI. So CPI came out last week, and much to our surprise, when you look at how things went last week for inflation, it clearly suggests that we're dealing with some inflation, but nothing like we were. Now, there's a problem with the data. We saw headline inflation come in at 2.7% and core come at 2.6. Tomorrow we'll get PCE. But the problem with tomorrow's PCE data and this inflation numbers, they're probably not terribly accurate. Some of the data was taken post the government shutdown, and while some of it suggests that there was definitely a flattening or a cooling in the month of October, November, it was a combination report, probably not 100% accurate. But it meant for markets a bit of a Santa Claus rally. And that what we're seeing is usually the week of Christmas, this week into the end of the year is a positive week. It's positive mostly about 70% of the time. And it usually adds around half of 1%. And so far today, we're having a pretty good day. I mean, you can't go by today because we're going to get inflation data here tomorrow on PCE. But believe it or not, we're up just about half of 1% today. So my point is that Santa Claus rally that we got, I'd argue in September, we had a really wonderful month of September when we normally don't have one. But then add to it that we had this time of year, which is generally euphoric. You get a lot of goofy things happening where people are selling things to tax loss harvest. Maybe they're reinvesting because they did that over the last month. So a lot of moving parts in the market between now and the 31st. There's also a shorter week. Obviously, the market's closed on Christmas Day and closes early on Christmas Eve. It's open for a full week next week, going into New Year's Eve. New Year's Day is a full day. My point is, there's some unusual things happening. But this time of year is usually good for markets. It's usually good when we get data that suggests a lower inflationary number, even if it's a little bit unusual, suggests that that's pretty good. So what we are seeing is good enough data to hold us on. And the one thing that came out last week was the November employment report came in at 64,000 jobs added. Now, the U3 number, which is the number you hear on TV, forget the U3, it's just the kind of the headline number. We're now at 4.6% unemployment because more people did come into the workforce. That's the vast preponderance that we saw. Something called the participation rate, how many people are employed, went higher, which is a great thing. That means people are coming back into the workforce if they didn't have a job, and they're hopefully either finding one or waiting around and looking for one. Now, average hourly earnings were up 0.1%. So that's a decent number. I don't want to see that flatten out too much. We're still above the rate of inflation, depending on sector, around 3.5 to 4% inflation. I'm sorry, annual increase on wages. But that number's weakening a bit. It means softer inflation, but we don't want to see that number weaken too much. Certainly not go below the rate of inflation. That would not be great for the U.S. economy. Right now, hanging in there. The number that did surprise me a bit was the U6 number. Now, U6 is ticking up to almost 9%. And why I mentioned the U6 number, because that's the number that counts everybody who's what we call underemployed, not counted in the headline number. And why I care about that number, that U6 number, tells me that we are seeing the number of people who are looking for jobs still be a tick higher. So I'm a little worried about that. The broad market, everybody out there, there is some softness in the labor market. Now, so far, we're not seeing a lot of unemployment from the form of layoffs. And we're going to get better, cleaner data for the month of December, which is always an unusual month because of holidays. Probably won't get a real understanding of inflation and unemployment until really till February, till we get the January data. So a little bit of unusualness in data right now, but nothing bad enough to send the market into haywire, and that's what's most important. We did see retail sales come in flat for the month of October. Not a big deal. There was some issues with autos and then gasoline sales. I paid 2.63 a gallon for gasoline here in New Jersey over the weekend. That's a really very impressive number, 2.63 a gallon. So very happy to see that kind of number. I'll put it all together. Lots of personal fun things happening, but also some really cool things happening with economic data that saying we're probably going to be okay. We're probably going to survive this thing and get through this pretty well for the rest of the year. Have a little bit of an uptick into Santa Claus time and go from there. With that, I got to bring on my buddy Aidan Redmond. Aidan, one of our analysts here, based in Boston. Look at that fun background. I like the back. Aidan, Christmas has got to be fun for you with your son. He's got a 4-year-old. Is that right?
3.5 now.
Very exciting times. What is he getting for Christmas from Santa Claus?
Too much, to be totally transparent. He is very into Paw Patrol. So he is getting every stuffed animal that he doesn't have, which unfortunately is still about 7 or 8.
We have a terrible story about stuffed animals. My kids felt bad after watching the movie Toy Story that if they gave the stuffed animals away or threw them in the trash because they didn't use them anymore, they would die in a garbage dump. So we now have to find places to give stuffed, and there are places you can give stuffed animals away, and we found them. But we still have literally bags of stuffed animals in the attic because we refuse to give them away, even though they don't use them. They're my kids someday. Yeah, okay. By the time they have children, they're gonna. We'll see how that happens. But good luck with that. That's exciting. So, Aiden, when we look back at 25, you worked on a couple of really interesting
Mhm.
topics. And the first one would be corporate taxes in Ireland. We call it the
Yeah.
Irish leprechaun experiment. Maybe tell us a little bit about what Ireland did and what it's done for their economy there and what they tried to solve with their tax structure.
Yeah, absolutely. And Ireland, had going back into the early 1980s, 1990s, there's a pretty significant problem on their hands. Economy underperforming, unemployment high. Country was really, really reliant on agriculture and these low value industries. On top of that, the Ireland's corporate tax rate was around 40%, incredibly high, which made the tiny Emerald Island incredibly uncompetitive and really discouraging multinational investment. So this is a country that wasn't going to win on scale, wasn't going to win on natural resources, wasn't going to win on their domestic market size. So they had to figure out another way to really draw in that investment. So they had to focus on attractiveness. So their decision here, cut that corporate tax rate. They wanted to pull in that foreign capital. They needed to modernize their economy, and they wanted to create these higher quality jobs. So what did they do? They cut tax rates to 12.5% of the corporate tax rate. That was fully put in place in 2003. Ireland became this magnet for multinational companies. They're getting this inflow of foreign direct investment, that transformed their economy. They got this massive boost in growth, a real GDP average of about 4% annually, pretty much since 2003. Employment followed. And again, with this employment force you had, this was, a workforce that English was their primary language, well educated, and then they're getting these high value jobs that were created in tech, in life science, and global services. And ultimately, they drew in these mega corporations. They drew in Apple, they drew in Google, they drew in Pfizer. Um, and it was really incredible. But because they had this low tax rate, corporate tax revenue surged because they had this tax base explode. Instead of this small pool of profits that they had before at this high rate, Ireland had taxed a massive pool of global profits at this lower rate. So by the early 2020s, corporate tax receipts have become one of the strongest pillars of the Irish budget, producing these really nice large surpluses.
So in other words, it sounds like it works. Lower taxes led to economic success. Is that fair to say?
I'd say that's pretty fair to say. It did come, with some, subtle warning signs. Again, you had the right now, if you take a look at what their corporate coffers and their line items, the top 10 companies that are there that are these global multinationals, they're, American companies for the most part. 50% of them are there. And, you know, that's something that there's a bit of concentration there, but ultimately, it's pushing the country into the right direction. Most recently, the OECD has said that they need to bump that number from 12.5 to 15%. So it's basically a 2.25% penalty on some of these companies. But those companies that are there, they're locked in. They've built their brick mortar anchor infrastructure there, and it's really only on companies that have over 750 plus in revenue. So it's a very small part of that, but it keeps Ireland as a haven for these businesses and for their economy.
So everybody, I draw this comparison to the United States, and that if in fact the aspect of the big beautiful bill that allows you to build new facilities and immediately deduct the cost against your revenue, I think it's a powerful stimulant. And I think Ireland is the greatest example. If it's working there, stimulating the economy, it hasn't stimulated since, oh my gosh, before World War II, then you have an opportunity to really see something significant because you can move the needle on manufacturing in the United States from 11% where it is today to maybe 13, 14, or 15. That's a game changer. So
Yeah.
I do think it's quite exciting. It was a great paper that Aidan wrote on this, and I think a fascinating topic for those. And this is where we don't play politics. For us, we don't care. We simply want to say, what would the greatest economic engine to help us make more money? I think this is one way to do it. The other hot topic you had, which was really quite fascinating, was AI and hallucinations.
Yeah.
And our most recent chart of the month talked about how often AI hallucinates. So how often does it hallucinate, and why should people care?
So it hallucinates a lot. And part of the impetus of writing this white paper is we were talking in one of our research meetings and just Googling as the market closed on certain days. And we were getting our market closing early on certain days. And it was telling us, yes, it in fact was. But so then we kind of dug into it and found some interesting research reports. But ultimately, people should care because there, when we looked at this paper, there wasn't some tricky or unfair experiment designed to trip the AI up. This was really, really straightforward. Researchers took these real paragraphs from real news articles and then just handed them to these popular AI tools, your Grok, your ChatGPT, et cetera. And the same stuff that the most folks are just using every day. They asked this very simple question: Can you tell us where this came from? That means the headline, the publisher, the date, and the link. Nothing complicated, nothing really going on there. And then that's where again it got really interesting. So they ran 1,600 tests. The AI systems got it wrong more than 60% of the time. And sometimes they pointed to the wrong article, other times they credited the wrong publication, and in some cases they just flat out made up sources that didn't exist. And why this stands out isn't just the mistakes, it's how AI and these tools handled them. So instead of saying, I'm not sure, I don't have the information I need, I can't find that, the AI usually is answered with total confidence. And that's the issue. So when something sounds polished and certain, most people just naturally trust it because it sounds good, and there's data that supports it. So that's the risk is that AI isn't, is useless. It's that it can be wrong in a way that's very, very easy to believe. And that's why this matters, especially when people are going to use AI more and more to learn, to research, or help them make, informed decisions.
Everybody, it's a fascinating topic because while there's three-quarters of $1 trillion spent on AI already, to hear that the best bot out there, Anthropic, has 40% of the times hallucinating is a concern. So it's not quite there yet. And there was a great story over the weekend about how the Wall Street Journal partnered with Anthropic and stuck a vending machine in their office. And the vending machine was completely run by AI. And guess what? Not only did it get emptied out in a matter of days, it gave away things for free. It gave money back to people, and they reordered things like stun guns for the vending machine. But on the flip side, hey, I don't know if I told you the story. My father grew up in Sicily, Montecalmastra, Sicily, and there's an old recipe I've been looking for about this Sicilian dessert called shaune. And Shauna is a very unique brand. It's only just made in his area. And just for the heck of it, I went into ChatGPT and I asked it that, do you know the recipe for that dessert? And would you know it? It gave me a recipe that looks very similar to what I think my dad's was. So I'm going to try it tonight. So for some things, everybody, I think it's quite fascinating. For others, I'm not sure. What do you think? What are your final thoughts on the topic, Aidan?
I mean, I always think AI is a really interesting tool. And one, you have to bring some of that dessert into the office so the folks can try it. I'd love to hear about how it goes. But I always come back to using AI as talking to my own toddler. He's gonna give me garbage. Sometimes it's gonna sound great, sometimes it's gonna sound good, but you have to know what you're asking, what the response is going to be, and what it should be. So there's the human element. You pointed to this in the Wall Street Journal article. Never underestimate a human's ability to manipulate technology, and that's at the end of the day. Be sure of what you're asking. Be sure of what's coming out. Trust but verify.
Yeah, and that's very well said. Well, Aidan, Christmas plans? What are you doing? Anything fun?
Similar to yourself, my family, I host a Feast of the Seven Fishes. So we're getting that all prepped up. Subtle differences. So yeah, we never really count the fish. There's always a random number that comes up. Where you have shrimp, clams are our big thing. So
Oh,
stuffed
I make garlic
quahogs.
clams. I make garlic clams.
So stuffed quahogs. Instead of we use linguine and clam sauce is the entree. And then
Nice.
for anchovies, we do Caesar salad with anchovies because it's just easier. Um, but we pull it all together, and looking forward to hosting a whole bunch of folks. And similar
That's
to
great.
yourself, it started as just a whole family getting together, and it went from a quasi religious holiday for us for more of just a family gathering with lots of food, lots of festive merrymaking.
Love it. Love it. Well, join me back at the end here, and we'll wrap up the year with your shout out. But
Okay.
I'll see you in a minute. Fred Boy, Fred, come on on, Fred.
Phil, how's it going?
I
Thanks
was
for having
jealous of
me.
Aiden's background, and you got a cool background too. So I went with I got like my vest on today. I don't know what the heck to wear today because I'm home, obviously. The damn dogs, two dogs here, by the way. Now, Fred, we have little Whiskey, this tiny little thing. My wife just got her second dog. She's crazy, and the other dog. So I had to quickly put on something that looks snowy. So I went with this, but I like your background. That was pretty cool. And you look the
I
part. You
like
got the
yours too.
sweater, the collar. You and Aiden both. You guys look
I
great
know.
today.
Next to the fireplace. Yeah, exactly.
You know, I have a fireplace in my house. I don't ever use it. You know why? Because my wife is a crazy Italian woman that hates the smell of dust, so I'm not allowed to even use it. Anyway, well, welcome, Fred. Thank you for coming
Thanks,
on.
Phil.
I appreciate you being on. You have a little boy too. He's only a year and a half, not even. How old?
Not even. He's 15 months now.
Oh
So
man,
he's talking more and more every day, running around. Everything right now he's in the phase of everything is ow. So he's obsessed with the word ow. So you touch him, ow. He does the ow, ow, ow. So it's great. But yeah,
that's
definitely have
amazing.
my handful. Yeah.
That's awesome. Well, good for you. That's good stuff. And he's a Jersey guy, but he's out in Denver. Hopefully, getting some family to visit you. Freddie
We
hit
are.
on some. Yeah, I'm sorry. Go ahead.
No, I was just gonna say we got the in-laws coming out. They're actually here now, so yeah, we're gonna have a good Christmas. Yep, thanks.
If your son's nearby, you should take off your background and show him. Well, that would be weird, but if we wouldn't even think about it, I could have Aiden's son on and your son on. It's fun, damn it. I may have my daughters join me next week. That's why I mentioned it. All right, if they can wake up on time and actually be productive, yeah, which is for college kids. Ask them to get up early. Good luck. You did a piece that's near and dear, the national debt and deficit. Why has the debt grown so much over the last 2 decades? And, what's driving it most?
Yeah, I mean, Phil, the last time we had the United States had a budget surplus was back in 2001, and I think that was around $150 billion. Our 2025 fiscal deficit, which ended at the end of September, came in at almost $1.8 billion. And, I think mostly over the last, 15 plus years, from really the GFC to about 2022, was this long period of low interest rates that encouraged higher deficit spending. And you add on there, we had a bunch of fiscal spending during the GFC, add on COVID-19. We've also had tax receipts as a percentage of GDP coming down over the last 10 years. And I would say just, the overall lack of political will to really do any readjusting, meaningful readjusting to mandatory spending. And when we look at what makes up the budget, right, or spending, we have about 61% of our spending is due to mandatory. So you're looking at Social Security, Medicare, Medicaid. Interesting, net interest expense represents now 14% of our spending. It has more than doubled over the past decade, right, due to higher interest rates. And
What is net
it's
interest
yeah.
expense? Maybe explain what that is, 'cause that's the big one for me. What is that? Now, what does that or me? What does that mean?
So really, it's just what the United States spent just to finance our debt, right? Just on monthly payments, right? So that's now exceeding what we pay on defense spending on an annualized basis. And in 2025, it was in line with what we spent on Medicare. So it's a significant part of the budget now.
Think about that, everybody. The interest payments alone are as much as we spend on Medicare and more we spend on defense. It's incredible. I'm sorry, Fred. Keep going. It just blows me away at that number.
No, Phil, when we look at, really what happened in 2025, the US. Now, so just to go back, right, 2025, a lot of volatility in the markets, and mostly because of tariffs, right? Particularly in the beginning of the year, right? So in the fiscal year, we had about almost $200 billion come in from tariff revenue, right? We spent about $970 billion on interest payments alone on our debt in 2025. So when we look at has, tariffs really shrunk the deficit? To a degree it has, but not meaningful, right? We still have seen, tariff revenue increase about 150% year over year, which is great. But compared to what we're spending, it's a small drop in the bucket. Um, and when we look at where our deficit is heading compared to last year we had a budget deficit of around 1.82 billion. As I mentioned earlier, this fiscal year we had about 1.78 billion. So basically the same, about $40 billion difference. But it's still equal to about 5.9% of our GDP, right? Which is above the 50-year average of about 3.8%. So while tariffs, yes, we are getting some more revenue. It's estimated over the next 10 years we'll get about three to $400 billion. Or I'm sorry, $3 to $4 trillion
No,
over the next
I
10
think you forgot
years.
the T there. Yeah, you got to
Yeah,
stop.
yeah, I needed a couple more zeros there, but it's not meaningful enough really in terms of our spending. So that's why, when the CBO does its analysis, there is going to have to be, if we want this trajectory to change, right, there is going to have to be some checked spending cuts, particularly on mandatory spending, which is kind of the third rail of politics, Phil, and I know that's basically why we're, in this situation.
Yeah, we talked a little bit about this in the past, everybody. If we just fix Social Security by raising the age from 62 when you could take it to 65, that would help a lot. Because then the unfunded liabilities aren't as bad. And to Fred's point, everybody, we got a real problem. This is why gold is up 60% this year. Why gold is up, silver's up 100 and I think 40, Fred, right? Something like that. If we don't find some fiscal ability to we're going to spend 6 trillion this year, 7 trillion this year, we make about 5 trillion. You can't do that. And the more you perpetuate this, especially the size of our economy, no one's going to want to buy our debt. Sometimes we forget it's. I don't think it's as bad if it's Greece because you can fix the debt problem with a little bit of money. But the United States, because the size, the pure dollars is so much money, it's very difficult to fix. So I think it puts us in a tough spot. One last point, Fred, what do you think is the long-term concern about if it goes unchecked, doesn't get fixed?
Well, yeah, Phil, I think you hit on it, on the very long term, right? It's going to be, global confidence in our fiscal position. More shorter term, it could be higher interest rates, and that would negatively impact bond prices. And it could also negatively impact economic growth. It's pretty interesting. There was a study that came out recently that showed, in terms of, global confidence in our fiscal position, this year really hasn't changed much. We still have seen, net purchases of our bonds, of our equities, of government agencies bonds, of corporate bonds. The only dip this year really came after Liberation Day in April, where foreigners were selling our bonds and our equities. But so far, even though we do have, a almost $1.8 billion budget deficit, that confidence that the global system seems to have in the U.S. is still there. But again, could be concerning, the more and more out we go, and if we don't change the trajectory here.
For sure. Well, great point, everybody. And one of my biggest concerns. When people ask me about a black swan, this is it. Let's pivot for a minute. The other piece there is AI in the workforce. And is AI affecting jobs? Where are we at with that? And who's most vulnerable if they are?
Yeah, I mean, it's a very interesting, topic. Phil, you and Aidan were touching on the hallucinations of certain AI systems. And, right now, in terms of the impact on the job force, right there, it's been minimal. So there's a study that comes out on a monthly basis that measures how many job announcements have been announced over the last month. And so for this year, there's been about 1.1 million job cuts announced. And of those 1.1 million, only 5% cited AI as a factor, right? So it's not been a significant factor in layoffs. However, I think we are starting to see, some trends in employment growth that are being impacted. So certain jobs like customer service, call centers, graphic design, software development, even marketing consulting, those are starting to get impacted. And I think, probably, most of all, you take a look at the tech industry, you are starting to see some impact there. Their percentage of employment compared to the overall job market has actually gone down since 2022 with the emergence of ChatGPT. So I think in certain pockets you are starting to see some disruption, but in terms of the aggregate job market, it's really not there yet, Phil.
And is this different than any other time in the past? We've seen other technological revolutions. Is this different or the same in your opinion?
I think it's going to be a little different. I think you can always compare it to, going back to the turn of the past century, the Industrial Revolution, or the rise of computers, or even more recently, right, the internet era. And I think with that, you do get a lot of people concerned about what that happens to employment opportunities. And so I think with, a displacement of jobs is going to be likely, particularly in repetitive or predictable work, right, over the next several years. Um, Now, the one interesting thing I will say, there was a study that came out as well that showed that AI adoption rates across companies has been really flat over the last 6 months or so. So right now, for most companies, it's in the high teens, low 20s. Um, and so I think that may be why we've seen kind of a stalling out of adoption because number one, maybe some companies feel it's a new technology, they're not comfortable with it yet, or they don't have, they lack the resources to build out their own AI tools. But I think, the trajectory is going to increase over the next few years as that gets out more and more. And so, Phil, just to go back to your question, yeah, I mean, I do think it is comparable to past, technological revolutions.
Or we'll get a lot of productivity gains from it. I mean, that's the expectation, right? The productivity will increase significantly.
Yes. Yeah.
And I
Yeah.
look, my example of me just going in and getting my dad's recipe rather than fumbling through old emails to try and find our phone messages, I just saved myself how many, maybe an hour worth of productivity myself. I mean, what do you think? Where's the productivity going to pop up?
Well, it'll be interesting to see. I'm really interested to see what happens in the manufacturing industry in this country because for the last 30 years, labor costs have been kind of the deterrent for U.S. manufacturers to bring capacity to the U.S. versus manufacturing overseas. Now, with the rise of AI, automation, robotics, we could be at a turning point where you need less and less humans, right? And you could automate more of this stuff, reduce your labor costs. And we could see more of a manufacturing revival in the US. We haven't seen it in some of, the ISM PMI numbers in terms of manufacturing. But I think with political head or tailwinds from, as you mentioned, the OBBA, you can now deduct, full expensing for manufacturing construction in the first year, and also onshoring. So I think with political tailwinds, lower labor costs, you could see more productivity, particularly in the manufacturing base, and that's going to be an interesting theme next year, Phil.
Yeah, I agree. And if we're really going to build smelters, we're going to need AI tools to help us do it, or robots, which are part of it. Flippy the Fryer. Remember my Flippy the Fryer conversation?
Yes.
Flying 500 million baskets. I think it's 500 million. 500 million baskets fried at French fry locations with a robotic AI arm. That's the future. What's Christmas Eve dinner, buddy? Or
Uh,
Christmas
Chri-
Day? Which one do you celebrate? Or both?
Christmas Day, we're going to be doing filet mignon, and just
Yeah.
the typical sides. I'm not a big breakfast person, but for Christmas morning, what I do, it's a tradition. I make donuts, so chocolate filled, kind of chocolate ganache filled donuts. So
Nice.
I
Where's
so I
mine?
so I start the dough the night before on Christmas Eve, wake up early, let it rise, and then do the whole thing. So it's a tradition that my mom had, and I've followed it through. So yeah.
Very cool. Very cool. All right, let's wrap this thing up. We've been yapping away for too long. Aiden, join me back on, buddy. I'll let you go first. Is there a shout out of the week or someone you want to give praise to that's in your life that matters to you, buddy?
Absolutely, 100%. You got a big audience here, Phil. Let me go to my wife, Emily. She is the one who keeps our home steady, safe, and happy and organized. So anytime I have the opportunity to give her props, I'm going to take it.
Smart man. Smart man. Cop out, in my opinion, but a smart man. That's
Okay,
okay.
the other one is Drake May, because after a long period of darkness
There
here in
you
New
go.
England, like the Patriots finally have something working for
Well
them.
done. And he's talented, that kid. For a second year starter, that guy's good. That guy's good, no doubt. What do you got for me, Fred?
Well, I mean, I got to follow Aidan's lead here. My wife obviously does a great job with our 15-month-old and, takes care of a lot. So very thankful for her. One other shout out I'll mention, don't know him personally, kind of wish I did. Elon Musk now has a net worth of over $750 billion after his package was reinstalled. So that's about $500 billion worth more than Jeff Bezos and I think Larry Page, who's number two and number three. So just incredible. Just thought I'd throw that out there.
Not only brilliance and sales all in one. You got to give the guy credit. I don't disagree with you. Well, good for you. That's very nice of you guys to applaud your families. Sure, I'll say my family and wife as well, but I'll take us to a different direction. I think in the world today, I think sometimes we forget this time of year, we want to give thanks, right? And I read the story about Boris and Sophia Gurman. And this was a guy who was just attending an event, him and his wife, in Australia. And the man had the courage to take on a gunman, wrestle him to the ground, get his gun away from the guy. And then sadly, the guy turned around and this gunman had a second gun and murdered both him and his wife. So, and I don't want to end on a down note, but I want to celebrate the heroism that it would take to do that, to be willing to put your life at risk, and did lose his life and his wife's life to do that for other people at this time of year when we think about all that we have. It's nice to know that there's heroes still left in the world that'll do things like that. And there were some other people too, Ravun, Amandeep, and Ahmad, all three other people, but none quite like Boris and his wife that were willing to do that. Boris and Sophia, and God bless them and may they're in heaven somewhere, and applaud them for their heroism. On something a bit more unusual, I read a really fascinating piece from First Trust, another firm we can rely on research for, about how the innkeeper for Jesus Christ in the manger is not a villain, but a hero. Same theme. Because even though the hotel was booked where they tried to get a room, he still gave him a place to sleep for the night. Whether it was a manger with animals or not, that's an interesting take on history, because history does have a lot of different ways to look at things. I guess I'd wrap it up with my real shout out of the week to the people I work with, all my friends at LTAM. That we have a wonderful team. We take great pride in managing money for you all. So my shout outs, we three this week. Obviously the innkeeper, this wonderful couple, but for the people that I work with, that we really never tire. It's not perfect. We get things right, we get things wrong. But Aidan and to Fred today, who joined me, thank you for being on. And so my Merry Christmas to you and your families. And for the rest of my colleagues at LTAM, it's been a fascinating year, a good year in some ways, a good year we could have been better than others, but certainly a year that we're very proud, and we take with great honor to be able to the ones who are providing you with this information and managing your money. With that, I'll wrap us up by saying very happy holidays. Merry Christmas, Happy New Year to those who celebrate it, Hanukkah and Kwanzaa. But most importantly, I hope you get a moment to maybe just take it all in. Like the Dean Martin song says, everyone's got a kind of a glow about them this time of year when it comes to the holidays. So hopefully you have one as well. And if you don't, go find it. Go find it. Go do something that's going to make you feel better. And hopefully you'll enjoy this time of year and reflect back. And we'll jump into 26 and we'll figure it all out together. I will have one more podcast to wrap us up on Monday. I'm going to do something real fun, I think. I'll leave it out there in suspense. But thank you for joining me this week. Fred and Aidan, you killed it. Good time with your families, boys. And we'll talk to you all real soon. Thanks, everybody. Bye-bye.